Hello, friends. Today we'll start with the final accounts of sole proprietorship. As the name suggests, it is the final chapter of your 11th standard accountancy. So, throughout this entire course, we read chapters ranging from journal, ledger, subsidiary books to rectification and other chapters. So, this chapter is the reason why all the other concepts were read. Everything that we read before are going to converge into this chapter. Now, if someone wants to become a master in the art of accountancy, he needs to become a master of this chapter. Without understanding this, actually studying accountancy is of no use. This is where all the fun lies. Now, essentially, the problem with final accounts of a sole proprietorship is in school and generally in other coaching classes, they don't explain the core concept and significance behind this chapter. It turns out that they start doing the sums directly and you without understanding the full concept, and it becomes difficult for you to really enjoy this chapter because this is the chapter where you should really enjoy. And what I can guarantee you is by the end of this chapter, you'll not only understand it clearly, your hold of accountancy will improve to a different level. Any gap in accountancy you had in concept during the previous chapters will also get filled here. So, what I'm going to guarantee you is by the end of these lectures, your love of accountancy is going to increase at least tenfold. And not only that, all the questions that need to be covered will be covered in it, and you'll become a king in the subject of accountancy. Now, I want you to write this general format. I'm going to give you an overview of this chapter. I'm not started explaining this chapter at all, but I'm giving you an overview. Just copy it down. So in final accounts, basically you prepare a trading account. Don't ask me what and why we prepare it. Everything will be explained. Now just write down this because it's an overview. So in trading account, this is the format. Here there'll be opening stock. Then you'll have a closing stock here. Then all your purchases will be mentioned here. Then your sales will come here. Then your direct expenses will be here. And once you find out which side has more value, all addition subtractions will happen. And finally, you get a gross profit. Don't have any doubts now because I've not even started explaining. This is an overview. I'm giving you an overview now because the entire chapter revolves around these formats. I'm giving you the format now so that it forms part of your brain right now. Then your gross profit gets transferred here. Then all your indirect expenses comes here. Then a net profit is found. Then after it's done, finally you prepare balance sheet. And in your balance sheet, there is capital or other liabilities and assets are here. And your net profit gets added to your capital. And the final amount goes here. And in the end, both sides of the balance sheet will tally. So this is the overview of the entire concept. Now let's start with explanation. Copy it down. Let's start with explanation. Now, before I start, I'm going to give you a personal example. I didn't realize the importance of this chapter until my first year of articleship, and I remember it was my second audit, and I'm not mentioning the name of the company. So it was a NBFC, it was a non-banking financial corporation. So I was given a task of looking through the trial balance of the company. So even though, but they didn't give me the profit and loss or balance sheet or any other document. Using the trial balance, I had to do my audit procedures. Now, I was very happy and I enjoyed this chapter during my 11th standard. So because of that, I was able to figure out a lot of things. Even without access to full documents required, I was able to figure out a lot of things and perform the audit procedure perfectly just because of my mastery of this chapter. So during a practical world of accounting or any other field you enter into, this chapter will come in handy. So today let's start with discussing indirect expenses and direct expenses. Now, each and every term in this overview will be explained, but there's a time for which every concept will be explained because I'm going in a sequential way. Now, the problem with this chapter is another problem. By the end of this lecture, your concept will become very thorough and you'll be able to solve any question in this chapter and you'll enjoy this chapter. There's no doubt. But your examiners sometimes they give you terms that may confuse you during your exams. Your concept may be thorough, but due to some terms, you may lose some marks. So that's why I'm covering even those terms. That's why you're starting with indirect and direct expenses. Because if that term is also covered, the examiner will not have anything left to trouble you. So I want you to take a new page and keep it in the landscape orientation. Like keep it like this and draw what I'm telling you. After finishing this drawing, your classification of direct expenses and indirect expenses will be completely clear. Usually, when they teach you, they give you only examples. They don't tell you the core concept. So here, I'm going to tell you the core concept of how a professional or a big public company classifies expenses between direct and indirect. It's a very clear-cut classification which nobody tells you. Now let's start. Now say for example, from the market, you buy raw materials. Correct? Now after you buy raw materials, usually what companies do is they buy raw materials through an agent because companies are not sure who gives the best quality or who gives the lowest price. So in order to get the best raw material, they go through an agent and who provides you the best quality of raw material. This agent you pay commission. I'm going to tell it like a story. This write it down properly. Then after this raw material is purchased, this raw material gets transferred into a factory. And for the transfer, for the transportation, a carriage or a freight or a cartage is paid. And this carriage is called carriage inwards. I'm taking out the chance of any doubts in future now. So if you pay close attention now, it will be very beneficial. Now, beneficial. Now let's start. So in factory, there are various expenses. You have to pay rent in factory. Then there'll be depreciation on factory machinery. Let me write this fully on factory machinery. Then you pay wages to your workers in your factory. Then you pay heating charges. Heating means your it is related to your machinery. That's what heating actually means. It's a big concept. You don't need to understand it right now. Heating just means it's related to machinery. You heat something, heat some raw material or something like that. That is heating. For now, you keep that in mind. Then you pay insurance. Insurance for equipment inside the factory. Okay, because this is everything relates to factory. It comes under factory. Then you pay salary. Now another question I get: why do I pay salary here? Because they're only workers. See, factory will have a manager, right? That factory manager, you don't pay wages to him, you pay salary. So that is the salary of the factory manager, right? Clear? Now this is factory. Now next, from this factory, your raw materials go to your godown. Now in order to transfer it, you pay carriage outward. Now see, there's a clear-cut definition. From market to factory, it's carriage inwards. From factory to go down, the transportation charges is called carriage outwards. Because it is going out of the factory. And here, this is coming into the factory. Now, in go down, same. You pay go down rent. You pay insurance of equipment in the go down. Then you pay salary for manager who takes care of go down. Correct. Now, after go down is done, from the go down, the material goes to the showroom. Showroom is actually where the sales happen. Like for a car company, everything happens and the car finally goes to the showroom, like something like that. I'm giving you the overall picture of the difference between direct expenses and indirect expenses. Will come for any type of raw material, any type of business. So write this down. So in showroom also you pay rent, you pay insurance, then you have bad debts. Because in showroom actual sales happen, so you'll have bad debt, that's an expense. Then you pay commission on sales. Now see, this agency commission is for purchase of raw material. This commission on sales is you pay an agent if the agent sells your product. Both are different. Correct? So basically, this is the work structure. Market, it goes to factory. From factory, it goes to go down. From go down, it goes to showroom. So expenses are incurred at different stages. This is the drawing till now. Now, the reason I'm drawing this is because the expenses incurred at different stages will be classified at different under different heads in your P&L and your trading account. See, your rent here in factory will be different from your rent here in go down. This will be in a different account. This will be in a different account, though it's rent. That's why I made this diagram. So be very careful when you're drawing it. Now, there's another thing, another important point. Now, though you have three separate places, it's a factory, go down, and showroom. Every company usually has a main headquarters office from where all operations are run. So operations means all the business, only business, all the transactions and business from the factory and the go down and the showroom are maintained and monitored in this office. So office is where all the staff work. So you pay salary in office, you pay rent in office, then you pay insurance in office, then you pay electricity charges. Then some auditor may come and audit your office. So for that you pay audit fees. And there may be telephone charges. You may do a lot of telephone communication via your office. So this is the overview. I want you to draw this entire thing. Now, this is where the difference between conceptual clarity and proper classification and lack of conceptual clarity and proper classification comes. Now, I'm changing the color of my pen. Why? Because every single expense, right from market to your factory, it's clearly called direct expenses. And next, every single expense from your go down, once again, to your showroom and including your office. all these are indirect expenses. This is how direct and indirect expenses is classified in the whole of accountancy. This is the top secret that not many tell you. So, in simpler terms, all expenses incurred from purchasing of raw material from the market to all the expenses in your factory is direct. As and when the goods go out of your factory, that is including carriage outwards, till the end, including office expenses, comes under indirect expenses. So starting from carriage outwards till your end expense in your showroom and including all these office expenses are indirect expenses. So this is the classification. I want you to draw it and keep it with you permanently. Whenever you have a doubt, you go have a look at this diagram. All your doubts should be clear. So this is the concept. Now you understood this concept. Now, in order to have better clarity, I'm going to give you something else. Now you written it down. Now, previously I told you all your direct expenses come here, correct? So I also told you from market to factory, all the expenses are direct expenses. So does this mean all these expenses will come here in the trading account and all other expenses, that is indirect expenses, will come in a profit and loss account? No, no. That's why I told you we'll go in a sequential manner. I never told you what will come in trading account. I didn't tell you the concept fully. So for that, under this, you write it down. Direct expenses have two classifications. Normal and abnormal. Now, normal direct expenses are just as mentioned above, all rent paid, depreciation, salary, wages, heating, insurance, and all those are normal. Everything that we want to have that happens in your business, and that is that we want to happen. Like that's very normal. All those things. See, the reason is why I'm not able to define it is because we can only define it by giving an example here, like the difference between a normal and abnormal. Don't worry, you'll understand by the end of these examples that I'm going to give you. Yeah, abnormal is expenses that are not normal. Okay, okay, that was a. Okay, I'm going to give you a better example, better definition. No. For example, goods lost due to fire. Goods lost due to fire is abnormal expense. Why? Because it does not happen every day in your business. But rent occurs almost every day, depreciation occurs every day, wages you need to pay every day, heating happens every day, insurance you need to pay, salary or commission or carriage needs to pay every day. But goods lost due to fire, it's very rare and it's very abnormal. It generally does not happen in your business and you don't want it to happen in your business. Those are abnormal expenses. Another, wages is normal. It happens in your business every day and you want it to happen because it's part of your business. It's a normal expense. But wages paid during, I read this in a book, so I was very impressed with this point. That's why I'm writing it. Wages paid during a protest. That is, if the workers in your family are doing a strike and still you have to pay them wages. That is not part of your normal business. That does not happen every day. You don't want it to happen in your business. So, but you have to pay wages to them even during a strike. So, that wages during a strike, during a protest, is abnormal expenses. Now, this is the classification. All normal direct expenses comes in your trading account. And all abnormal direct expenses comes in your profit and loss account. Now, here you write normal. Now it's simple. All direct expenses, that is all normal direct expenses, will come in your trading account. All abnormal direct expenses will come in your profit and loss account. That is all abnormal direct expenses that happens from market to factory within this circumference or this compound. If it happens inside this area, from a market to a factory and it's an abnormal direct expense, it comes in a profit and loss account. Other than that, if there's a normal direct expense, it comes in a trading account. Correct. And all indirect expenses, that also comes in a P&L account. It's simple. All normal direct expenses come in a trading account. All indirect expense in your comes in a profit and loss account. All abnormal direct expenses come in your profit and loss account. Now I've taken a very important bullet that the examiner has from Ms. Chamber. Now you will never have a doubt in this concept. Abnormal direct expenses. Done. Now another question I get at this time is, what if indirect tax expenses also can be classified into normal or abnormal? Yeah, it can be. But any indirect expenses, whether it's normal or abnormal, will come in a P&L account. As simple as that. Now this concept is clear. So, but I made you draw this, but I need to explain this, right? I just given examples. So for explanation, I'm going to take some examples, which will make you think a lot about this diagram and which will completely clear any doubt you have regarding this diagram. So let's start. Now, rent of a factory. Where does the rent of a factory come? Again, go to the diagram. From market to factory, it comes in the factory. So rent of a factory, it takes place in the factory. So rent of a factory is a direct expenses and it's a normal direct expenses. So it comes in your trading account. Next, rent of a godown. Rent of a godown. So godown comes under the bracket of indirect expenses. Indirect expenses, whether it's normal or abnormal, it goes to your P&L account. That's what we read. So profit and loss account. Now another question. Now I just say rent here. I'm not mentioning if it's factory or if it's godown or if it's office or showroom. So how do we classify it? So in this case, if you look at this diagram, you have rent here, you will have rent here, and you have rent here. So the maximum rent that is paid is for these three. You have rent here also. But on a weighted basis, indirect expenses, there are more rent. So you always assume whenever they just say rent, that it is an indirect expenses and it goes to the P&L account. Simple. Now next, salary of a factory supervisor. Now, as mentioned above, salary of a factory manager, factory supervisor is a direct expense and it's a normal direct expense. So it goes to your trading account. And salary of an office manager, it's an indirect expenses. It goes to the P&L account. Now just salary. How do you classify it? This is where examiner make you get stuck. How do you classify salary? Again, have a look. Where salary is paid maximum? Where is normally salary paid? Factory we pay salary, but only to office manager, office or factory supervisor, factory manager. But go down showroom and office, you mostly you pay only salary. So salary happens more here. So you write P&L account. You assume it's an indirect expenses. Now, if you have any doubt in the question they ask in the exam, you solve it using indirect expense and the bracket you give. Assume it is an indirect expenses. It happened in your go down or showroom or office. That's how you have to write. It's a subjective paper because accountancy is an art. There's a different way to interpret an art, but basic concept is this. We have not even started the enjoyment part of this chapter yet. I'm just giving you cases where the examiner might trouble you, because after these cases, we're going to go into proper questions and proper concept of the final accounts where you're going to start enjoying fully. Now, next, wages to factory worker. What is wages to a factory worker? It's within the factory. It's a normal expense, normal direct expense of trading. Factory to office worker. Now, worker is given here. But in the office, there may be peons or gardeners whom you need to pay, but they work within the office. They provide services to the office. So it comes under this ambit of this indirect expenses. Now, wages. Now, again, what is wages? Where do we pay wages actually? Mostly we pay wages only in factory. Here also we pay wages, but it's for small peons or gardeners, but very small scale. But mostly we pay only in factory. So where we pay better than weight, it's if we take on a weighted average basis, factory's wages is always maximum. So we assume that wages always is a trading account, it's a direct expense and happens in the factory. Now, carriage inwards. Carriage inwards we read here. Transportation for coming into the factory, it's a normal direct expense. So it's trading. Now carriage outwards. Carriage outwards is written here. From factory to go down, the movement is called carriage outwards. So since it's outside the factory, it goes outside the ambit of a direct expense, it goes into indirect expenses. So profit and loss account. Now carriage. Now pay attention. I'm going to tell you an important point. When I say market, market can be in any state. Like raw materials can be procured anywhere. Say you want to get access to a specific raw material, which gets found only in specific places of the country. The carriage we need to pay is humongous because you need to get raw materials from that place into your factory. You have to pay a lot of carriage. But from factory to your godown, it's a normal transportation we do every day. So it's a very, very low cost compared to the carriage inwards we pay, where from different places you need to get raw material from different specific places. So you always assume carriage is carriage inwards. So it is trading. Correct? This is the basic concept. Now wait. I'm going to give you more terms here. Now next, if they say wages and salary, because they may give you some points like this also to confuse you. I'm going to clear all the points before the doubt even arises. Wages and salary, and then they'll give you a term called salary and wages. So wages is direct and comes in trading. Salary is indirect. That's what I told you mostly. So it comes in profit and loss. Now, where do we classify this entire term? Whenever they give this question, always only pay attention to the first word. First word is salary here, wages here. So wages comes in trading. So wages and salary goes to trading. Here the first word is salary. Salary goes to P&L. So first word goes to P&L account. Then heating and lighting. And lighting and heating. This also, heating is the heat within the factory. Lighting is usually in the office, all the lighting happens, right? Electricity charges, that lighting. That is lighting. So heating usually takes place in the trading account. And lighting goes to the P&L account because it usually happens in the office or go down a factory or not factory or showroom. And heating mostly in the factory. So again, look at the first word, it's heating. So assume trading account. Then first word, lighting. Lighting, where does it happen mostly? It goes to the P&L account, as it mostly happens in factory go down or I think I told it wrong. Heating happens in factory and lighting happens in office, go down and showroom. Keep this in mind. Sorry. Now, let's go to the next concept. Now, before jumping, when I was going through another lecture, I remember this from my lectures. So I wanted to write this point down. It's a very interesting point. And I want you to answer this point. Salary, if you answer this, that means you understood this concept clearly. Salary of factory manager who works from office. Now, what this actually means is there's a factory manager who manages the factory, but he doesn't go to the factory. From the office itself, he manages factory. Because many people are very, very skilled. They can do it from even their house. They just need to manage a few people, right? So, where should this be classified as? Will it go to the P&L account? Will it go to the trading account? Is it a direct expense or an indirect expense? This is the question I need to ask you. Now pause for 1 second, think of it, and then continue. So the answer is it goes to the trading account. Now why? This factory manager actually provides services for the factory. Correct? It provided service for the factory. It goes in the factory expenses. And any expense happen within the factory is a direct expense. It doesn't matter where he works from. Where does his service get added? That is the question. Where does he provide service? His service actually is for the factory. So it is a direct expense. It goes in the trading account. Now, that's it. This is a simple concept. These are the examples. Now, let's go into the main concept of the final accounts of a sole proprietorship. Now, in order to explain this concept, I want you to remember what I taught you in the first lectures. That is not basic accounting terms. After the second chapter, that is journal entry. So I classified everything in accountancy into these 5 aids. Liabilities, expenses, and revenue. Correct? And I also told you assets have a debit balance, capital has a credit balance, liabilities have a credit balance, expenses have a debit balance, and revenue has a credit balance. Now, if you're not very clear about this concept or the concept of journal entries or ledger accounts or trial balance, I suggest you go through the lectures of that I've already given you. Only after you understand that, you can proceed. Then only you start enjoying this chapter, or it will become difficult for you. I always suggest go through the basic chapters first. Now, even if you have not read from me, you go through the first chapter that I posted, these demo lectures that I posted of each chapter. That itself you'll have a basic idea and you continue with this chapter. But please go through that for complete conceptual clarity. Don't start with this final chapter immediately, because I won't be doing it justice then. Now, here, I already taught you how to prepare trial balance. So in trial balance, say as on 31st March 2023, we always prepare trial balance for the end of the year, and at the end of the year we prepare. So under trial balance, all these assets, I'm just writing these 5 terms impact in the trial balance. Asset will have debit balance, capital will have a credit balance, liabilities will have a credit balance, expenses will have a debit balance, and revenue will have a credit balance. Now the rule of trial balance is the end both sides should tally. Correct? As simple as that. Now, before we proceed further, write this down. Asset, capital, and liabilities, the amount that will be mentioned in the trial balance is always as at the end of the year. But for expenses and revenue, the amounts that are mentioned in the trial balance are throughout the year. Now, what does it actually mean? Concept is simple. If, for example, in the trial balance, there is land and it is worth 1 lakh rupees. So what this actually means is, starting this the end of the year, so 31st March 2023, and this year started on 1st April 2022. So we are giving you an example. So 1st April 2022, the land was actually purchased for 1,20,000. And by the end of the year, during the year, about 10,000 new land was purchased and 20,000 depreciation took place and 10,000 land was sold. So as at the end, 1,20,000 plus 10,000 minus 20,000 minus 10,000. At the end of the year, this 1 lakh is 1 lakh is left in the books of accounts with the company. So this 1 lakh is entered in the the debit side of the trial balance. That's what this actually means. Same thing for capital and liabilities. Liabilities is as at the end of the year, after all adjustments are made. Only the end balance will be mentioned in the trial balance for assets, capital, and liabilities. But for expenses, take for example, you have rent, and throughout the year, say for example, in the 1st April 2022, you paid 5,000. Then on 1st May, you paid 6,000, and you didn't pay for the other months. Like there's no need to pay rent for the other months. And on 31st February, on 31st March, you paid another 6,000. So totally you paid 17,000 rupees in rent throughout this year. So here, these expenses, this 17,000 goes here. It's not at the end. It is throughout the year how much rent was paid. You add everything, and that expense, the total amount gets transferred to your trial balance. That's what throughout the year actually means. The same thing happens for expenses and revenue. This is the concept. Now, let's go to some of the core concepts here. Now, for example, if in your trial balance, there are two things. One is there's an asset, that is there's a building. This is just an extract. So in your trial balance, whenever I say extract, that means both sides will not tally. It's just a small portion of your trial balance. It's not a complete trial balance. So you have 1 lakh rupees. And you also have depreciation on building. That is 10,000. Correct? Both sides will not tally. It's only an extract. So you have these two terms in your trial balance. One of the many two. These are two of the many terms that is there in your trial balance. So now, how do we classify it? Now I'm going to do a mistake now, and then I'm going to show you why it's a mistake for conceptual understanding. Now at the end, usually the mistake people do is in your balance sheet they write building 1 lakh and then minus depreciation 10,000, and the remaining 90,000 will go to the outer column of your balance sheet. Now, the reason I gave this example is to show you where people usually make mistakes in this final accounts. This entry, this transaction that I showed here, this business transaction or this concept that I showed here is completely wrong. Because when I told you previously itself, this building is at the end. That is, it's this depreciation on building would have already been taken into account while getting the closing balance of this building. That is, during the year, this entry of depreciation account debited to building account 10,000 would have already been made, and your building account would have been reduced in your ledger account. And at the end, at the balance, 1 lakh rupees left. That is, the building must have been 1,10,000 before, and after this 10,000 depreciation, in the end, it is 1 lakh. That's what this 1 lakh actually means, because it is as at the end of the year. This depreciation on building is throughout the entire year. Like there may be depreciation start throughout the entire year on different months. all the depreciation is added and the total amount comes here. Expenses and revenue is always throughout the year. Assets, liability, and capital is at the end of the year. These two concepts need to be clear in your mind. Then only you can proceed. This is the concept. Now, clear? Now, before we jump into questions, another concept I need to make it very clear. Say, for example, usually the books are closed on the 31st of March of any year. Say this year 2023 books are closed. So books are closed. What happens is you'll have several ledgers, right? So all the ledgers will be closed and millions of ledgers. So that ledger's balance, hundreds of ledgers balance will get transferred to your trial balance. If it's a big company like Reliance, there'll be lakhs and lakhs of millions of items in millions of ledger accounts. So all the ledger account will be closed on the last day and a trial balance will be prepared and both sides will tally. And after it tallies, from this trial balance, a trading account, a profit and loss account, a balance sheet, a cash flow. All this cash flow you'll learn later. You'll have fund flow, then you'll have various ratios you need to prepare, and several other capital budgeting. All those things you'll do. You'll learn later in your future grades. But for now, at the end of the year, this happens. And trial balance prepare all this. But my question is this: they say you have to close the accounts on this date. So is it possible to close those lakhs of accounts on this day, then prepare trading, P&L and balance sheet and cash flow and other things on a single day? They say 31st you have to close. So by the end of 31st, you have to close this account and prepare all those things and give this all these statements to the management. That is the job of accountancy. Is it possible? No, it's not. So what usually people do is, say for example, say a financial year is from 1st April 2022 to 31st of March 2023. So what companies do is they close the books around this, just an example, on 23rd of March of 2023. That is, they close all ledgers, trial balance, and everything. They close all the ledgers and prepare trial balance. Now, after preparing trial balance and closing ledgers, no other new journal entry can be made, and then there will be no change in the ledger accounts. But from 25th March to 31st of March, business still runs, and that impact also should be shown at the end of the year in the accounts, right? Of the accounts of 31st March 2023, the entire year's business impact should be shown. But this 6 days impact is not shown, and it's completely wrong. See, we are looking in a very small scale. If it's a big company, say Tesla or Reliance or maybe Tata or JSW Steels, any company, the 6 days business will be worth over 6,000 crores or more. So at that time, we can't afford to close the books before 6 days and not have any impact on the business. So what is usually done is, accountants close the books by 25th of March 2023. That is, they close all the ledger accounts and they prepare trial balance. So after this trial balance is prepared, so that is assets, liabilities, capital, revenue and expenses is prepared. Debit, credit. Okay, clear? So, okay, for clarity purpose, I'll erase this. Now, after it's prepared, what they do is, because they clearly know this entire transactions, this entire items is only till 25th of March of 2023. Correct? But in the next 6 days, there may be new assets purchased, new liabilities created, new capital introduced, new revenue, other expenses. But the entire trial balance includes only all assets, liability, capital, revenue, and expenses till the time of 25th March 2023. And just for convenience of preparing accounts, we can't close the business for 6 days. So what do? So after trial balance is created, after it, there is a concept called adjustments. Usually there's a sole proprietorship with adjustments. So your adjustments is very difficult. It's a lot to learn. All those concepts is actually very simple if you understand what adjustments really are. Adjustment actually means, let's see, for example, after 25th of March, rent of 10,000 more gets paid. Further bad debts of 25,000 happens in business. And there'll be hundreds of other transactions that takes place from 25th of March to the 31st of March. So that is the meaning of adjustments. So now this adjustment not only includes the transaction that takes place after 25th, it may be some errors that happened in the preparation of accounts or any other change in principles during this period. We'll go through whenever we solve questions. We'll go through every cases that can be done. But for now, understand these are adjustments. So once this is done, what happens is, say for example here, debtors are 25,000. Sorry, 2,50,000. And expenses, bad debts, 10,000. So what will be the treatment here? I'm giving an example of on the first day, I'm going to teach you the full concept of adjustments. Other than that, it will become easy for you. So now, what will be the net impact in your balance sheet? In your balance sheet, this debtor is there, 2,50,000. Now I told you before, this bad debts will not be subtracted from this debtor because at the end, that is 25th March 2023, all the adjustments that could happen in debtors are already happened. That is, debtors, bad debts have already been subtracted, new debtor has already been added. So all the existing debtor bad debts has been subtracted, and the end is 2,50,000. This expenses that happened throughout the year has already been adjusted to this debtors, and after this adjustment, the debtors at the end of the year is 2,50,000. The expenses that already are there in the trial balance will have no impact on the assets and liabilities because it is assumed that the assets, liabilities, and capital have already adjusted for all the expenses and revenue that happened throughout the year, and the end at the value as at the end is recorded in the trial balance. So now this bad debt is not recorded, but after 25th, further bad debt of 25,000 happens, and this is only at this debtor is only as on 25th. So this to the 25,000 that happened after 25th has not been adjusted in this debtor. So now bad debt minus 25,000 and remaining 2,25,000 will get transferred to the balance sheet. So this is how adjustment entry should be done. This is how it happens. And now another. I have not explained the full part of profit and loss yet, but still in the P&L account under the expenses side, because we are assuming bad debt this happens only in the showroom. I told you that it happens only after factory when you sell goods. So this bad debts is an indirect expense. So this bad debts of 25,000 rupees comes here. This is the concept. So this is the basic concept and the entire concept of final accounts. Now we'll start with sums, and each and every sum and each and every concept will be covered there. For now, you just revise this, read through it. There's nothing else I have to tell you for the first chapter. Now enjoy. Bye guys.